I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Tim, the European Central Bank has decided to keep their rates the same, but they say they will review cutting their rates. How does that set up the Fed meeting coming up later this month?
Well, let's walk through that and talk about that. I think the meeting is the 31st, so it's coming up next week if I remember right. But, let's kind of review where we're at, how we got here, and where I think we're headed. The leading economic indicators that I look at, they talk about how great the economy is and, making America great again and all that stuff. But you look at these leading economic indicators that clearly warned at, and it's literally some indicators that I have, some of which, from other sources, some of which I've came up with. But, the leading economic indicators, they warned it at previous tops, going back, previous 4-year cycle tops, major market tops, warned in 2018. And as this market has rallied out of the December low, none of those warnings have not been corrected. They've been intensified, if you will. And so, again, the market is providing cover for something that is going on under the surface. And looking at what's going on under the surface, it is, at the core of it is the bubble, but then it's also the economy. This has evolved beyond just a bubble. It's evolved into a massive economic problem. And if you look at it, we have the declining interest rate since November. It was like a wall. Interest rates, you can see it on the charts. Everything changed really in November. And then come December, that's when the Fed started their dovish talk, as they say. They changed their policy. We've been seeing the declining interest rates, the flattening of the yield curves, and with some of these key spreads. And now what we're seeing, everything is a process when you look at it, and we're seeing some of these key spreads either starting to re-steepen or in a position to re-steepen. And those are all warning signs, I think, of how we're progressing and where we're going. So to get to your question, though, on the interest rate specifically, just before the show, I went back. I have a spreadsheet going back to 1940, early 1940s, 41, 42, 43, I don't remember. And it literally is, the discount rate versus the Fed. Well, I have Fed funds and discount. I looked at the discount rate versus the 3-month T-bill. And we've talked about this before where, the Fed actually follows the 3-month T-bill. It's the lead. It leads, and then they literally follow on the rate height and cut cycles. And going back to the early 40s, there's no precedence for a cut with the spread where it's at now. Currently, the T-bill, I don't know where it is today, but as of yesterday, the T-bill, 3-month T-bill was at 2.1%, and the discount rate's at 3, so that's a difference of 0.9. There's no precedence going back to the early 1940s for a cut at this point. Do I think they're going to cut? Probably, because the market, the market, I think it's kind of discounted that the market wants the cut, so I don't think they want to disappoint the market. But, back in 2000, I think the differential was, spread was like at 1.8, if I remember right, and then and I'm saying that from memory, that's close. And then in 2007, when rates started to decline, I think it was around 1.4, 1.5. And then, like I said, going back in history, there's just no precedent. So to cut here from that perspective would be unprecedented. I don't know what they're going to do. I mean, I tend to think they may cut. That said, I don't think it matters, because if you look at this historically, you look at, when the cutting started and the rates started to decline historically, these last tops and particularly in the deflationary cycle that I think we're moving into, I think that's the beginning of the end. They're not going to, I just don't think that they're going to save it here. I think it's going to be, like I said, the beginning of the end.
So with the beginning of the end, what are some of the warning signs you said were there back in December that haven't gone away?
Well, the declining interest rates, that started. Now we're seeing some of the key spreads that had begun to widen. They're still widening. Some of the others are in a position to. Raw materials data. The raw materials data it collapse is the right word. I mean, it's continuing to weaken, and overall, I would say that it has been in a collapse, but nobody sees that because nobody looks at the data, which is a good thing. But, I've talked about, I have that data going back to 1800. It's turning down out of the sixth economic cycle, long-term cycle since 1800. That cycle has been, that up cycle that it's now turning down out of. This is one of the leading indicators of where we're at, the environment that we're in. It began to turn down several years ago. It is now, like I said, collapsing below some previous cycle lows. But this entire stock market advance out of the December low, we haven't seen a reinflation. We haven't seen these interest rates turn back up. We haven't seen this raw materials data strengthen. We've seen them continue to weaken. So those are not signs of a reinflation. Those are signs of a continuation of the setup of the topping of this mammoth bubble that we're dealing with. And not only has it turned into, everybody knew that the stock market back to 2015-16, the market was overdone then. Even Trump talked about it going into the election, how it was a bubble then. Well, hell, if it was a bubble then, it's far more than a bubble now. But it's morphed into just an overvalued stock market into, more so of a bubble, and these deteriorating economic indicators, the downturn of this sixth cycle since sixth economic cycle since 1800. The downturn out of that cycle is morphed into these interest rates decline. It's morphed into that overall deflationary setup taking hold. And so, granted, it's taken forever. And granted, they've done a magnificent job at holding it together, but in the process, it has of trying to hold this thing together, it has morphed into a bigger problem. And those things just haven't gone away. Now, how long does it take before this bites? I don't know. I don't know. But it looks like we're in the ninth inning of this thing. Especially if we go into a rate cutting cycle.
We'll have more with Tim Cyclesman Wood right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, perhaps some of the symptoms you were talking about also in the automotive sector. GM announced that it would be laying off thousands of workers and closing plants. Nissan today said it would be cutting productions and laying off 12,500 people. Are those the canaries in the coal mine dropping dead right there before our feet?
Absolutely, and I'm so glad you brought that up. I had no idea of that news. Absolutely no idea of that news. And let me say this to that point. One of the, and I don't mean, I use this term loosely. There are some economic indicators, there are specific economic indicators that I'll look at that are warning whenever we, started the show I was talking about. But some of the other pseudo-economic indicators, if you will, that I watch are various sectors, and one of which is the automotive sector. Automotive led. It led at the top, and I know you probably don't remember. We talked about the leaders last year and how we had this top-out parade, and we saw how, and I don't remember which ones they all were, but I do know that automotive led. I know that some of the European indices, like the Stoxx 600, which is a broad-based European stock market average, it led. Bitcoin led. There were leaders. There's always, Richard Russell called it his top-out parade back in 2000, and I sort of did the same thing back in 2018. Well, automotive led then, it's leading now. The charts are leading. And then you tell me, out of the blue, I had no idea of that news, that this news has occurred. So these charts see these things. The fact that it takes, so long to sometimes to come together is another story. I mean, we have no control over that, but I see what I see. And, to that point, I had a call from a subscriber and listener, this morning, and he was telling me, he said, reminded me of a quote by Roger Babson. He was a great economist and wrote books and stuff back in the 30s. And he called the 29 top, warned of the 29 top. He said a great crash is coming, and it may be terrific. And that's true. And he was a couple of years ahead. I mean, he saw this coming. This same guy was telling me, he said there was this guy, Julian Robertson, and this big hedge fund manager, and he was telling me about an article where he was warning, and he thought it was current, but it was 2015. This guy saw this then, and nothing has improved. It's only gotten worse. And so, on the one hand, yes, they've done a magnificent job at keeping this thing alive, and I don't know how much of it is just the market and the nature of the bubble versus how much of it is actually, something at play to the manipulation and that sort of thing to keep the thing going. But whatever those factors are, I mean, it can't go on forever. Something is out there, and what I'm saying we're seeing with these leading economic indicators, with these yield curves, with this collapsing raw materials data and the things that are going on now, is it has morphed into an even bigger event, I think. And now we're seeing these major cracks occurring. And so, just like you said with the automotive news, something is out there, something's going to crack it, and when it does, then it's done.
Is the market being supported right now by money fleeing Asia and Europe?
I don't know. There's probably, there's always that rotation going on in sectors, but I have no way to prove or disprove that. I suspect that is what's going on when you see the leaders, like I talked about last year, money was, it is perfectly logical that what we were seeing was money leaving Europe because the European indexes led, and then, the U.S., was the last one to drop into that December low. So maybe there's some rotation going on. Maybe that's what we're seeing here. But the overall setup is, it's a slow and grueling process. And this has gone on so long, I realize no one believes, no one believes anything that is taking place. Hell, they can't see it. It's so big, it's like you can't see the forest for the trees.
We'll have more with Tim Cyclesman Wood right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, is gold going to be a safe haven if the bubble in the markets bursts?
I don't think so. Some are even saying Bitcoin is a safe haven, and I don't think so. And the simple reason is, I think, the evidence, let me back up a little bit. The evidence was that the 9-year cycle top had been seen in gold. And looking at that evidence still today, you'd have to make the same call based on that evidence. I mean, you can't look at a precedence and hard evidence and say, this has happened every time, but, now all of a sudden it means something different. It was there. And it's still there. And I think what we have seen is, like I said, a retest of that 9-year cycle top. And when you look at, the correlation between the deflationary forces, the raw materials data, what I see with the dollar, it all points toward lower gold. I realize that we've seen this pop, and like I said, I think it was maybe gold was sensing some sort of market fear. Maybe it was just that technically we just needed a retest of the 9-year cycle top. I don't know, but the data overall suggests that the rally is counter trend and that gold goes lower. And I think the same thing with crude oil. I think we may even have an intermediate term top in crude oil at this point. And I think crude and gold goes down with the raw materials, just like they historically always have.
Crude oil, is it going to recover, or is it due for a drop?
No, it has been bouncing, but I think it goes lower with the market and, like I said, raw materials and gold. I think it moves lower. The other I mentioned briefly, comment before I forget about it is Bitcoin. And, I've heard people talk about it. I've even had the question asked to me if Bitcoin would be a safe haven in the midst of a market collapse. And, I just no, for two reasons. I mean, number one, if you look at it technically, looking at the data, the charts, the cycles, the price movement is pretty much the same as with equities, although when I say price movement, the cyclical rhythm is pretty much the same as with the equity market, but the magnitude of the cycles is obviously different. But the rhythm is the same, if that makes sense. And so Bitcoin was one of the leaders in 2018 that led to the drop into the 2018, that top out parade. That led to the decline in the December low. Well, now we are starting to see Bitcoin, the cyclical rhythm. It's just beginning, but it appears that it is starting to lead again. What the lag time or lead time is on that, I don't know, but that's where we're at. It's starting to lead. So I don't see it from that perspective. From another perspective, it doesn't pass the common sense test to me that if we were to see an all-out economic collapse, that there would be some flight to a cryptocurrency. I mean, I don't know. Maybe I'm too old school, but that doesn't even pass the common sense test to me. So, no, I don't see that as a safe haven either.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.